The housing winter is here, you guys. Home sales have crashed to Great Recession levels. We're going to talk about it. More negative news for the housing market. Let's get into it. So, housing winter arrives early as existing home sales crash to Great Recession levels. The long feared deep freeze sets in. Now, mind you, this is on a national scale, but of course, we're seeing a lot of this here in Phoenix too. So, existing home sales dropped a stunning 15% in September on a year-over-year basis to a seasonally adjusted rate of 3.96 million transactions. That's according to the National Association of Realtors. That's the lowest figure in 13 years since 2010. Notice that they are talking about resale homes because new construction isn't being affected as much because they have the ability to buy down the interest rate for the buyers. Really, resale is where we're seeing the worst of all of this. Contributing factors, the mortgage rates, shocking, hit 8% this week. We're going to talk about it. Don't worry about that. But also, we just don't have a whole lot of homes being listed on the market because we've got that whole thing where people have low rates and they don't want to list their home because they have nowhere else to go because it's too expensive to buy otherwise. This low housing affordability is the cause between interest rates, between increasing home prices, and then declining housing inventory levels. That has also contributed to the drop in transactions. Housing inventory is down 8.1% from this time last year. Now, I wouldn't look into that number all that much because last year we saw rising inventory rates. At this point, it was starting to come down a little bit, but still, I don't know that that comparison is ideal. However, we do have low inventory in general. But here in Phoenix, we're seeing inventory rise at the quickest it has all year. I'm going to show you that towards the end, so make sure you stick around for that. In 2010, the last time existing home sales were so low, we had a lot of other things going on. We had, the economy was on life support. The Fed slashed interest rates. We're in a whole different situation now where the Fed has been hiking interest rates. We're not entirely sure what's going to happen next with interest rates. And so they're comparing this to the 1980s. And I just did a video on this last week where I talked about the housing recession coming and looking more like the 80s than 2008. So I'll link that video at the end if you want to check that out and learn more about that. Today's housing market isn't anything like the market of the mid-2000s, really talking more about how at the turn of the millennium, house prices are rising today alongside mortgage rates. At least they have been. Home prices are pretty much either up or flat this year, depending on the area of the country that you're in. So we haven't really seen home prices be affected. It's more so the number of homes being sold that is really crashing, so to speak. So let's go to mortgage rates. Big news last week. Mortgage rates hit 8%. Doom, gloom, Kool-Aid, and warm porridge. I love the title of this article. Mortgage rates finally broke the 8% ceiling this week. At the same time, existing home sales fell to the lowest levels in more than a decade. Pretty gloomy, but they are saying there's some silver linings. What do they say is a silver lining? Well, they're saying right now we're in the midst of a supply shortage, not a glut of homes on the market. Therefore, that is going to continue to keep prices stable. So we can look at that as a potential, silver lining. Resilient home prices in year-over-year terms, they're already back to positive territory. Now, they're also talking about it being a silver lining in that the Fed might be done hiking interest rates, or at least they're not quite as hawkish, although this is a little bit confusing right now. They're saying the sentiment helped turn the tide this week with a few different things in the market. The Fed is suggesting that it's done hiking rates unless inflation flares up. Well, here's what the Fed said. Here's the latest. It's kind of split. You're hearing a little bit of both. Fed has to get away from meeting by meeting guessing game. Bostic doesn't see the first rate cut until late next year. Powell says more strong data in September could warrant further interest rate hikes. Powell might be more hawkish than his colleagues. And then Fed can wait and watch. That's what Waller says. So we've got a little bit of everything going on. It's not really clear what they're going to do next. This week, we're going to see the PCE data come out. We're also going to get Q3 GDP. So some of that information might help us better guess or predict where they might go. But so far, they're kind of split down the middle. Now, I will say I'm recording this on Sunday. I'm headed to a conference this week. So if you get more information about this by the time it comes out on Tuesday, I apologize for that. So, not knowing where the Fed funds rate is going to go, what can we expect with mortgage rates? Well, experts are saying they won't rise much more, but they also won't go down anytime soon. So I don't really know if that's good news or bad news. They don't think rates are going to go much higher. Fannie Mae is saying that the rates will dip to 7.3% by the end of 2023. Isn't it a sad thing when we have to say rates will dip to 7.3% and to 6.7% by the end of 2024? Mortgage Bankers Association, they're saying rates will fall to 7.2% by the end of this year and 6.1% next year. So all in all, these predictions are not, one, super helpful, and two, aren't going to move the market all that much, in my opinion, until we get under 6%. I don't think buyers are going to be that jazzed about going back out there. I talked about how home prices have not really been affected all that much. We've kind of remained flat. I mean, last year we did a little dip, came back up. We're kind of year over year around the same place generally. Home prices could drop 5% if rates stay at 2-decade highs. This is Morgan Stanley's prediction. So they're saying that basically, in their view, even a 5% growth in inventory next year could yield a 5% drop in home prices by December of 2024. Now, I don't know that we're going to see a 5% growth in inventory. I think that would be pretty hard to do, just considering this lock-in that we have going on with sellers with low rates, but it could be something that we're going to see. Phoenix is already starting to see an increase in inventory. So with that, what's going on in Phoenix? So let's talk about the CMI. And this week, you guys, I do have the table of all the 17 largest cities updated for you. So I'm excited to share that. But man, this just keeps going down and down, 129. So if you're new here, the Cromford report has this market index that is incredible for us to follow and understand what's going on with supply and demand, and really kind of predicts where prices are heading. And 129 is over 110. 110 and above is considered a seller's market. 90 and below is considered a buyer's market. So we're still in a seller's market, but this has been going down quite a bit. Our demand has also been falling quite a bit. 72.8. They consider 100 being that normal range. So we're about 28% below normal for demand. Supply remains low, but it is growing. We're about 44% below normal for our supply. This was at 50. It was in the 40s at one point. This has been climbing for sure. So we're in a situation where demand is going down, supply is coming up, and that is bringing this overall number down closer to a balanced market and out of a seller's market. So we're still hanging on in Phoenix Metro to the seller's market, but just barely. So here's what it looks like on a graph. And I think this is always so important to share so you can really get the visual of where we're at. Since August, nothing good's been happening with the CMI. We have just been continuing to fall and fall and fall. So if you're a seller, this is not what you want to see. This is showing that all of your leverage that you have as a seller is quickly dwindling away as the months go on. If you're a buyer, this is exactly what you want to see because we're getting closer and closer to that balanced market and possibly even a buyer's market. There are a few cities in a buyer's market. Let's check it out. So remember, anything under 90 is considered a buyer's market. So we've got Buckeye, Goodyear, Queen Creek, and Maricopa all in a buyer's market this week. And then Surprise is really the only balanced market. Everything else is still in a seller's market, but gosh, just everything is going down. Every arrow is red. And if you're new here, all of those red arrows just mean that those cities have lost ground for sellers as we look at this table month over month. Now, we have seen a pretty big change month over month. The entire table on average has fallen about 13.4%. And the last time this was measured 2 weeks ago, it was 11.2%. So that tells us that this trend is accelerating, which isn't surprising to see because you can see these dots are coming further and further apart when we look at the overall index. So we've got some making big moves, Chandler being one of the top spots that's lost a lot of ground. We've also got Cave Creek that has lost quite a bit, Buckeye, and then Peoria as well up there. Phoenix, Paradise Valley, all of those losing quite a bit of ground more so than others. And then we've got a few that are still moving, but at a lower speed, like Gilbert, Avondale, Glendale, Fountain Hills, Tempe, Surprise. They're not seeing too much change, but or certainly not as much as the other cities. But all in all, everything is moving towards that balanced market or the buyer's market, especially in the case of these four at the bottom. Now, what's causing this? I mentioned supply is rising at the fastest rate we've seen all year. And here you have it. Active listings are just going up and up and up. These dots are further apart, showing that that is an increase week by week in the number of listings that we're seeing on the market. And this is really because we just don't have the demand to absorb it. Now, we are seeing, quite a few listings come on the market. And last week in my video, I was showing that new listings hasn't ticked up significantly. Really what we're seeing here is that demand is not absorbing what we have on the market. So we're getting a supply increase of active listings, which means the more sellers on the market, the more they have to compete on price, the more they have to eventually decrease their prices in order to entice buyers or give some sort of concession or incentive for buyers so that they look better than the other listings out on the market. With all of this going on, the Cromford Report is saying we could potentially be in a balanced market altogether throughout the Phoenix area in a matter of weeks. If you're thinking of buying, this is great news for you. If you're thinking of selling, you may want to keep a very close eye on this to see what happens, especially as we get into the holidays, as demand typically dwindles anyway. For buyers and sellers, I have some information linked in the description below, and that video about the housing recession, check it out here. I'll be back on Friday with another video.